Hi, I'm Harrison Schiffbauer, and I'm a licensed mortgage loan originator, or loan officer for short. And today I want to talk about down payments. A down payment is the hard cash that you put down to purchase a home. Oftentimes, it's referred to as putting skin in the game. Now, why do we need to put money down? Well, to be 100% honest here, it's because when you put your own money on the line, you're less likely to default or miss any of your payments, making it a safer bet for the bank. Now, with all that being said, let's give you a quick reminder. A conventional loan generally requires a 5% down. An FHA is a 3.5%, while a VA and a USDA is a 0%. If you're not sure what I'm talking about though, see the link in the description below about the different loan programs. Now, for the conventional loan program, there is an awesome product that you may be eligible for that requires a 3% down, referred to as the Home Ready program. Now, this one does have a lot of strict guidelines, but remember, that's why it's a 3% and not a 5%. But what do I mean by strict? For example, your income has to be 80% or less for the median income of your county. Not only do you get the benefits of that 3% down, you also get great rates on conventional loans. Now, I'm going off script here for a moment, but in my experience, it's actually had a lower interest rate than the conventional, and it's actually been cheaper to get on this Home Ready program, but that may not always be the case because rates do fluctuate. Now, what are some ways we can get a down payment? I mean, after all, we can't just dream up 5 or even 3% to buy a home, right? Well, honestly, the easiest way is to just save your money. Don't go though. There is more. Don't get mad at me, okay? My recommendation is to just take a look at the homes in your area and get an idea of how much they list for. This is going to give you a good baseline when you're trying to figure out that 3 or 5%. Now, I know I just told you about a 3% program, but let's think 5 because we want to be looking at worst case scenarios. And real quick, it's actually better for you because even if you find a program for 3%, you can take that extra 2 and put it towards your closing costs, keeping more money in your pocket. Now, what if we just find a home that's perfect for you and you've really got to make a move now? Hopefully by that point, you'll have 3.5% saved up if you've been doing this for a little bit. Now, I just said 3.5. I've been saying 3 and 5. Where did that come from? It's because I'm talking about an FHA program. Remember, your loan officer is going to find the one that works best for you. We're just talking general numbers. Now let's go back and talk about that 5% again. Let's say, you know what? I'm not going to save all 5%. What are your options? Let's say you have an awesome family. Either your parents or your grandparents are pretty well off, and they want to help you get into a home. What they can do is they can gift you money to the purchase of the home. But hold on. What's this about a silent second that I've heard about where they loan me money? Can't I just take another loan to get the money to do down payment? Don't do it. But why shouldn't I do it? Well, the reason why is because then that is counted as a debt to your DTI, to the debt to income ratio. And if you want to know more about that, the link is in the description as well. But let's go back to the gift funds. We took a little bit of a tangent there. They can help gift you funds for the down payment to the home or even the closing costs, and all we really need to do is to get them to sign a letter stating that this is a gift and they are not expecting it to be paid back. And your loan officer, that's me, we'll go ahead and we'll put it towards your costs so that way you have to bring less to the table. But remember, these aren't the only ways to get a down payment. There are special programs that do allow you to finance that down payment as a second mortgage. A great example of this is the FHA Home Loan program. That's that 3.5% that I was talking about a little bit ago. They are able to allow you to finance that into your home loan. So that way, you don't have to bring that to the table, but it does affect how much you're going to be paying each month. Many times, it's either going to be like a 10-year or a 20-year payment, so you're not having this massive bill on top of your mortgage. But there is good news. After a while, when you've been making your payments towards your mortgage as well as that down payment assistance, you can do a refinance and combine the two together, consolidating the debts into one payment, so that way you don't have to worry anymore. But remember, there are other options as well, so send me an email and let's talk. So I hope this was helpful. Thank you for joining me, and we'll talk again soon.